Okay, good morning. Today is the weekly edition of Donald's Daily Digest, where we're going to go over the SPY, our thoughts on the CPI numbers this morning, and then whatever watch list that we have for the week. JJ, you want to start with the SPY analysis for us?
Yeah, let's get into it. What's up, everyone? Hope you're all doing well. Happy Tuesday. So, we got the SPY here. We were looking for a little pullback. That's what I was kind of anticipating after that, seeing us up in the open in the pre market. And I was looking for a pullback into this 2 day anchor. At that time, it was like I was looking for some potential support at 460.94, 460.18. We got some support at the 460.64 level, a little bit below the 2 day, and we were able to push up, reclaim the VWAP, and we pushed to a new high a day. So that brought us right into that bullish scenario where we were actually looking to get above the 461.78, reclaim that, which we got a nice reclaim at 10:14, 10:15 today at that 461.78 level, and we're able to continue pushing into this to potential level of interest for resistance at this 462.93. Just reading off that bullish scenario here. So we're at that little level of interest of resistance. Let's see if we can continue to push up. But so far, got a nice pullback to the 2 day, held this nice VP node in the 460.74 area, held the 5 day moving average, and we were able to break above that 461.78 and push to that next level, that next target. So again, just nice VP levels respected, and yeah, that's what we got for the SPY today. I lost you, Ryan.
Yeah,
Uh,
I can't
so
hear you
yeah,
either. Oh,
Yeah, so we pulled back from those CPI numbers, right? I mean, pretty much everything was in line, except for the month over month, which is a 0.1%, right? Which I think is what
Right.
caused the push or the pull this morning, right? But we pull we pulled back right into some buyers because then we pushed right back to where we were. And now we're gonna see kind of where we land, right? So we're doing another little pullback, but we're still up 63 cents on the day. So we will see.
Yeah, we'll see if we'll end up just setting up for an inside day for tomorrow, and then with that next PPI and the interest rate decision. Who knows, right?
Yeah, so we got core PPI at 8:30 tomorrow, PPI at the same time, but then we've got the federal funds rate, which is expected to stay the same, right? 5.5. But then, as we know, Mr. Drop the F bomb Powell uh, will have his statement and then questions afterwards, right? And that's going to be the interesting part to see what he changes, right? And we'll do like we normally do, and like look at the comparison of the words that he says and see if there's anything different. If he starts to mention, the yield curve, right, which he's done in the last two FOMC statements, um, and to continue that. So Tom, let's see. Let me pull up your chart here. So Tom is the art. What did I call you last time? The
I
Tesla mad genius.
appreciate that. I don't feel that way most days, but we'll at least go over with what I see. So for me, I was looking at this morning based on two routes: the bullish or bearish interpretation of the data, and Tesla definitely went to the bearish side. So for me, I've been looking at the 237 level, 237.16 specifically. We flirted with that yesterday and almost came back up to the 240 level where I was expecting us to come into this morning. So Tesla did not appreciate the news this morning very well, and it's pulled back. So for me, I'm continuing to look between 237 and 235, see if there's going to be any bullish pattern created, or bearish going into tomorrow. Looks like we're kind of shopping in there, which I'm fine with, especially with the data for tomorrow. But I am still bullish if we're sticking around this 235.02 level. I still see some catalysts of bullish data from a year over year. They're targeting 1.8 million vehicles delivered this year. It looks like they're going to make that. There's a lot of news out there regarding, year or month over month, and then November last year. November last year, to me, had an anomaly. They had the peak amount of Shanghai production and sales for that month. They have never gotten back up to that number. So from a year over year in November, nothing is going to come close to that. So I've seen a lot of news talking about, oh, it's down 55% or it's down 18% year over year. It's like, well, when you have an anomalous spike high in that 1 month that you've never come close to again, of course. Likewise, at the beginning of this year in April, they had a super low number of productions and sales. And then last year, April, they had a low number. And this year, April, they had a high number. And so you got to look past that, in my opinion, and look at what the true number is month over month. They've got more sales in China this month of November than last year. So I still think they're going to make that. It just depends. Can it hold up here at this level throughout the FOMC and see where we go through the end of the year with the news cycle?
Yeah, you're in a core group of people, right? At least from November, December.
But if it makes a strong bullish pattern, especially getting up beyond intraday, and we crack 231.4, there's a lot of air to go down from there to about 226 to 221. So it's definitely on the radar. Tomorrow's going to really be a deciding factor, I think, for where it goes.
With the PPI numbers, yeah.
And the FOMC,
Yeah.
Overall market could continue to push it down.
So does anybody think that they're going to reduce rates?
Tomorrow?
Yeah.
No.
Yeah, I don't think so either. I think it's going to be probably on message, right? That he's been the last few times of, we're going to stay here longer, and we may just stick, right?
Yeah, he's gonna
That's
say
what I'm.
He's gonna say the same thing he always says. We're without price stability, the economy cannot function, and we are going to get our 2% inflation. But he's lying. He doesn't want 2% inflation. He wants higher inflation. But anyway.
Hey,
No, I
Donald,
mean,
do you think he'll change the?
Go for it.
Do you think he'll change the? What is it, November or September next year for the first predicted reduction, or do you think he'll change that?
No, I think he'll talk hawkishly. I think he's going to focus on higher for longer, following the data. I don't think that he's going to give the market anything bullish, but the thing is nobody believes him anymore. He's sung this song so many times. Like I told you guys 6-8 months ago, it's like, we've had our last hike. We're done for the year. But how many times have they been saying, we're going to raise rates, we're going to raise rates? They're lying. And they're smarter than I am. But the goal is to keep everybody to think inflation's going down. And did you see the most recent numbers for what everybody thinks inflation's going to be? Well, it dropped. So last month it went up. This month it went back down. And so that's what Powell wants. As long as people think inflation's going back down, that's all that matters. Because the only way that the U.S. can get out of its debt is to inflate. And last time we had a 100% debt to GDP ratio, we inflated out of it. So it's going to be the same game plan. And so I think he wants 3 to 4% inflation, but he doesn't want everybody to know that, because that's going to make inflation worse, because people will start spending more money. So, that's the song and dance that he's going to continue to do. But as far as cuts go, you got to understand, what does cuts represent? Why would he start cutting? What would it represent? If he's cutting, what's happening?
Inflation's reducing.
Well, no. If it's not even, he doesn't like take inflation out of it. Like
Right.
inflation's already reducing. He's getting what he wants in inflation. What's everybody worried about now?
Recession.
Yes. So why would he start cutting?
Yeah. Right. Yeah.
Because he thinks, oh, well, shoot, maybe we are going to go into a recession. Maybe this Goldilocks scenario of a soft landing is in risk. So until there's data that shows that maybe, hey, you know what, we need to start cutting, I don't think he's going to. You know what I mean? Like, why would he? And so I think personally that data is going to start hitting in 4 to 6 months.
Yeah.
But there's no point to cut right now, and he wouldn't do it, and it's actually bad. Think about the last few times that we've pivoted from hiking to cutting. Equities actually went down. And so it's actually a bad sign for equities when he starts cutting, right? Why? Because the economy's going down. So this is that balancing act that I said if they pull off, wait, hey, congratulations.
Right.
It's like we gotta just slide right in, right? Slide it right in. And they're doing a wonderful job so far, but
I know. Say what you want about him. I mean, they've pulled off a pretty dramatic feat, right? I mean, of all the money that they spent, I mean, the yin to the yang,
Well, that's the thing, right? There's still $4 trillion left in the. If you go look at the M2 money supply, and you look at the trend line, we're still over $4 trillion, right? And so this is what everybody's worried about. If you go to the M2 money supply and you look, and you see this huge spike up, right, and then you see this huge drop down, but if you draw that trend line, we're still about $4 trillion over. And so what everybody's saying is, yeah, right there. So if you draw that trend line out, right, we need to come back down to that trend line. And so if we can't come back, I mean, once we do come back to that trend line and that $4 trillion is gone, then what happens? When everybody's cash and free cash is gone, what happens? I don't know. And
right.
if somebody thinks they know, I think they're lying. Can you take guesses? Yeah, because this has never happened before. You know what I mean? And so what we have to, as traders, what we have to do is say, I personally believe that in the next 12 months, we're going to continue this bullish trend because we have enough money in the M2 money supply, even though it is going down at its fastest pace ever. Great. Doesn't matter. We're still $4 trillion above. Are the companies that we are investing in going to be able to have good earnings because earnings drive the market? Yes, they are. When is that going to become a risk factor? Probably after that. That's when we have to worry about the economy having a quote-unquote hard landing. And that's when Powell would say, okay, I'm seeing data coming in that sales are dropping, unemployment's going up, people are losing their jobs. We need to start loosening the interest rates. Does that make sense? So it's actually going to be bad news for equities when he starts cutting, because there's signs that companies aren't doing as well as they have been.
Right.
I hope that makes sense.
No, it does, because people are still spending, right? So why cut right now, right? Like, you could say whatever you want about the housing market right now. It's starting to slow down, right? Which I agree with, right? But if you look at, people spend, they're still spending on credit, right? They're still spending, their savings, right? There's people are still spending. So what's the purpose in cutting? Especially if you're looking at it from an inflation standpoint, right? Like, why, right? People are still spending money even at the high rates that we have. I mean, we've been watching like eggs and stuff like that for the longest time, right? But if you look at the cost of just, normal goods, right? I mean, there was this big comparison in Costco prices, right? Just from a year ago to today, and they're like still double, right? But people are still buying it, right? I mean, we love Costco, right? And they're still spending and spending and spending, right? You know, whether or not they're putting that on credit or using their savings or whatever, but it's still happening, right? So why cut now?
Yeah, and so what I'm hearing in your mind, and what I'm hearing you say though, is you have a worry about credit card debt.
Mm-hmm. Yep.
Am I hearing that correctly?
Yep. I do. I think
Can you
that
pull this? Can you pull this picture up that I'm posting in there? So if you look at the leverage ratio, total debt relative to total assets, where are we? Ratio of debt payments to family income, where are we? Percent of families with debt to income above 40%, where are we? We're down. We're lower than we were in 2019.
that's interesting.
We're lower than we were. Like no. Sure. Inflation hurts poor people, and believe it or not, if you make more than $32,000 a year, you are in the 1% of the world. Now I get it. That's poverty in America, but poor people in America are the ones that are being hurt the most by this. Like, I have millions in debt, right, for houses and things like that. But guess what? That debt's all locked in at 2% to 3%. So I'm
Right.
making money on this inflation. Let's go, right? The poor people that have to spend $12 for a dozen eggs, they're the ones that are hurting. So the people like us, we're covered. We're still good. And so we're the ones spending money. Like, if we start cutting back on our spending, then yeah, that's gonna cause a problem. But I don't think we're even close to that. Give it a year, we'll see.
So kind of staying on that same trend of things decreasing, Brian, I put in the Fed credit and liquidity balance sheet. Is there a target that you think he's hitting or looking at on this to in alignment with inflation, to bring down this balance sheet, Donald?
Yeah. Is there a target? That's a great question. I don't know. I don't think I've ever heard him say there's a target. Let me see what you're looking at here. So I just pulled up mine, and this is what I'm looking at. Let's see. So it looks like he's brought down 1.17 trillion, it looks like, from 2022
Yes.
to today. Is that right?
Yes.
So I think this is going to be, what you just mentioned is going to be a big talking point. We're going to continue to bring down the balance sheet, right? We're going to continue to do this.
So what is it? Pre-COVID levels was the 4
Yeah.
million or whatever.
But if you look at 2008, right? 2008. We went up. Did we ever get back to those levels?
No, we did not.
No. And this is the way that fiat currency and debt works. So, is the goal to get back under 4? Probably not. So, I think they're going to bring it down as much as they can. Excuse me. Until it starts hurting the economy. And then they'll
Gotcha.
start adding to it again. Does that make sense? That would be my guess. So,
Yeah.
but anyway, we'll see what he says tomorrow. A couple things that I did want to talk about here is, we send out that weekly watch list with plays in it, and ideas. With the data, I don't think anything's changed. So I'm still biased for a Christmas rally. And one of those that I like is Amazon. I got into Amazon on Monday of last week, and that cost basis is about $143.25. I got in yesterday as well, right about $144, and then I actually got in today right out the gate. I actually got into it pre-market, and that cost basis is about $145.75. 175 and 145 50. But what I did was I scalped out like a buck this morning out of 5,000 shares. So now I'm going to hold 1,000 shares because I've lowered that cost basis, right? That 4,000 that I profited to bring it back down to about 140. So I'm sitting on a cost basis now of about 140 from this upper level to see if we can push this into year end. I told you guys I think the Qs and the SPY are going to come to all-time highs. We're within what 3% on the Qs, all-time high. But if you look at the heat map from yesterday, did I share that with you, Ryan? I don't know if I shared this with you.
I don't.
Here, let me post this in here. I want you to look at the heat map from yesterday, and what I think's going to start happening, and what I've been saying for a while. The reason I invested in the IWM at the end of October and the XBI is because as people start thinking about rate cuts, who's going to get hurt? Well, it's the people that were blessed with it, and it's the big dogs that have cash. And so the people that don't have cash, they're going to go up. So that's the heat map from yesterday. So do you see how everything was green? Except what? Apple, Microsoft, Nvidia, Google, right? So the market was going up while everything, all the Magnificent Seven were red, right? I need to see more of that. Now, that even though I do think Amazon's going to run into the end of the year, that's what I want to see more of, so that we can push on like the XBI, the IWM, these smaller cap names that I'm long term in, like CPS. They'll start getting bids because money will become less expensive as if the rate cuts come in. I don't think we can have another year of the Magnificent Seven holding us up. I think we need to do a wide lift. Yeah, and the S&P ratios are, I think, around 18.5. When I got in to the small caps, they were at 11.5. Now I think they're about 13.2. Right, so we need that to, maybe bring the S&P down to 18 and bring the small caps to 14. Right, we need that to continue to close in so that we have the whole breadth of the market can move together instead of just 7 or 8 companies carrying us.
Yeah. And then, I mean, in that getting to like the XBI, right? My favorite is the IWM, right? I think we need to start seeing some of those because those were hurt, the most out of the pandemic, right? And see those start to now rally.
Yeah, it's anybody that needs money, right? All those companies needs money. I mean, since we invested in the IWM, it's already up 30%, 28% is what it climbed, right? And so I still think we can get more out of this. Like I think next year, I think emerging markets, small caps, if we're going to be in a cutting environment, I think those are the ones that we can look to. I think the other big companies, they'll do fine, they'll do well, but that's kind of where I'm going to be looking to try to make some money. I'll still be playing good companies that I like. In a shorter term trade, like I'm in Salesforce. I mean, this is a picture perfect, TTM squeeze setup, and I'll continue to play those. But as investing comes, that's why I'm so dead set on BABA, even though it keeps making lows. I continue to add into this, man. Like bring this thing down to 50. I don't care. I'll keep buying more.
I mean, their numbers are just amazing.
It's insane. It's ridiculous.
Yeah.
To think PDD has a bigger market cap than BABA just blows my mind. Like BABA has 60 million in assets that aren't even accounted for and what they can break off. They've got 60 million, in cash. They're producing 30 million in a billion in cash flow. So literally in 3 years they could buy their entire float. And people are paying this much for PDD, which is because of Temu. It's like, come on. Anyway.
It's crazy. I know. I've been looking at Baba's numbers recently, since we've been talking about it a ton, and it's just nuts. Like, how, right? And I get the risk and stuff like that, but they're still doing really, really well, right? Like, it's amazing. Yeah.
I don't know if I shared this with you or not, but I think I did. Did I share with you the numbers of BABA versus PDD?
No.
So
You
here,
have
look,
that?
look at this. Pull it up. Pull it up on the screen. So, same market cap, right? So let's just pretend you're going to buy a business. Actually, PDD is more, I think, now. So if you're going to buy a business, like, I don't know, a Subway, you know, I own Subways or Sport Clips, right? And so if we said, you know what, let's decide what business we want to buy, right? Market cap wise, Alibaba is 181 billion. Okay. PDD is 750 billion. Okay, so I can pay what is that? 4 times as much, 3-4 times as much for PDD,
Right.
or I can buy Baba at a quarter of the price. Total revenues, Baba. Gross
Right.
profit, doubles. We're doubling the gross profit of PDD.
Right.
Operating income, triple. Earnings before income tax depreciation, doubled. Cash flow, yeah, the cash flow on PDD does look great. It's wonderful. But compared to Baba, you're 3 million under, right? And so it's like, it just blows my mind. It doesn't make any sense. I'm like, how can people not see this? Why are people not buying this? And so eventually they will, and eventually I think it'll balance out. But maybe it takes a year. So,
I mean, just look at the total cash and short-term investments, right? Like,
dude, like
just total
if you're
cash.
buying a company, which one are you going to buy? The one on the left for 750 billion, or the one on the right for 180 billion?
Yeah, right. Yeah. Yeah,
If you're not buying the
as
one on the
much
right,
cash- yeah, it's crazy.
you know what I mean? It's like, oh my gosh. Like,
Yeah.
So anyway,
No,
we'll
it's-
see.
it makes sense. I mean, you know, and it keeps just getting beat up. Yesterday was interesting, right? I was excited about yesterday because it made the low, and I'm like, okay, great. Now it's pushing back up, and then just keep pulling back again today. So
Yeah.
you know, I'm in it with you. So I think it makes a lot of sense just looking at the numbers alone, right? I mean,
Yep.
we'll
No, it's going to be hated until it's not, and then it's going to be loved. So
love.
once it hits 120 to 140, you're going to start getting all these idiot analyst upgrades, and you're going to start seeing people come out and say, "Oh, Baba, I love Baba now," and it's gone up 100%.
Yep.
So,
Yep. Okay. All right,
all
guys.
right, guys,
Well,
I enjoyed it.
that'll wrap, and we'll start doing this more often now that we've got the technical things out of the way, and you'll hear more from us later. Anything else, guys?
That's it, brother. We'll talk to you guys
All right.
later.
All right, guys. Thank you.